We have not started to price in lower earnings. Your thoughts?
No, keep in mind that with respect to the dollar, about 30% of S&P revenues come from overseas, and the dollar has now strengthened about 10%. So on a very simple math basis, that's about a 3% hit to earnings, which I don't think has been fully incorporated by earnings estimates. But that's just one part of the problem. The market is also still pricing in pretty strong margins for this quarter as well as through year end. And while the earnings bar for this quarter isn't that terrible, it's about 5% year over year. When you come into the second half of the year, the market's still pricing up earnings about 10%, which is going to be a very, very difficult bar to be able to beat. So I still think that earnings need to come down.
Erin, if you're a Fed official looking at this dollar strength right now, is it our currency your problem? Is that the message to the rest of the world?
I think that's right. I mean, if you think about what's really driving the divergence between the dollar and the other developed market currencies, the first catalyst was certainly the central bank divergence. But now you've seen, I think, much more strongly being impacted is the fact that, Germany is now is now lobbing in a trade deficit, and I think that that's really what's driving this significant, departure between the dollar and the rest of the developed market currencies, just given the oil price impact and the gas impact that's hitting the shores of Europe, even more significantly than in the U.S.